On the next slide, we'll continue going over this ratio and percentage analysis. The second test for the ratio and percentage analysis is test of liquidity. The first one of the liquidity test will be the cash ratio. But this is not very important because most of the institution would not use it. Instead, they use the current ratio, which is the cushion of a working capital. It is defined by the assets versus the liability. If you take a look at the financial statement, the assets is about $37.5 billion and the liability is about $26 billion and current ratio is about 1.44 to 1. This means that for every dollar there is a $1.44 as a cushion. The next to this Next, we go check the quick ratio, which is a short-term liquidity ratio. Quick assets including cash, short-term investment, and accounts receivable. We do not count the inventory as the quick asset. The value is $9 billion plus $16 billion plus $5 billion. Which is about $31 billion. On the financial report, the liability is about $26 billion, so the ratio is about 1.21 to 1. This quick ratio is measured of the safety margin that is available to meet the company's current liability. Next, we check the receivable turnover ratio, which means the efficient collections. It is the net credit sales in the amount of $108 billion and the average net ratio, which adds the 2 years and divided by 2, which is about $5 billion, and the ratio is about 19.25. This high receivable turnover ratio suggests that Apple is effective in its credit granting and collection activity. Next, we'll check inventory turnover ratio, which is the liquidity and operating efficiencies. This is computed by the cost, which is about $64 billion. Then divided by its average inventory, which is about $913 million. So the ratio is about 70.5. This number means that Apple can realize the profit 17 times inventory is sold. The more this ratio, it is normally more favorable. On the next slide, we're talking about the third kind of test for the ratio and percentage analysis, which is the test of solvency. The first kind of test is times interest earned ratio. It is defined by all the incomes divided by the expenses on the interest. For Apple, because there's no interest being found on the statement, so this ratio is not available. Second one is the cash coverage ratio, which is the operating cash flow divided by interest paid. Again, there's no interest, so this number is not available. The third one is debt to equity ratio. It is computed by the total liability divided by stockholders' equity, which is about $40 billion divided by $76.5 billion, and the ratio is 0.52, which means each $1 of stockholders' equity, Apple had only 52 cents worth of a liability, and it is very low risk. On the next slide, we do another test, which is the market test. This test needs market information, which we choose the August 20th, 2012 closing market price as a reference. The first one is a price-earning ratio, which is market price per share divided by earning per share. The market price is about $665 and the EPS is $42.53, so the P ratio is 15.6. This P ratio is pretty low, and the dividend yield ratio is defined by dividends per share divided by market price per share. Because dividend is not available, so this number is not available. After all this test, we can tell that this company has ample of cash, good revenue income, low liabilities, low risk, and high return in the share appreciation. After we get the financial analysis, we use it as investment decisions, which include the company strategy we went over, in the financial statement analysis, which we ran over, and ratio and percentage analysis we went over as well just now. Then we going over some other analytical considerations. For the investment decision, there is advice from the professional analysis, which first take a snapshot from the market. On the side, we can see that the daily range is about $630 to $634 per share. 52 weeks, the swing is $354 to $644. The market cap is about $592 billion, and the P ratio as of now is 14.87. It doesn't change that much. The EPS is about 42, and the total share outstanding is about 937 million. An institution owning about 68%. The other factors we might take in consideration before we do the investment would be the economy situations, the industry response, and the individual company financial situation. On the next slide, we go over some analysis recommendation. This including two different kind of numbers. One is consensus recommendation. Basically, the consensus recommendation is outperformed. The estimated next earning will be 8.45 in the on the next table is the recommendation and revisions. As we can see, on the buy side is favor than the sell side. So this means that the 27 people recommended to buy and 1 people recommended to sell. In between, outperform is 21. If you divided 48 by 55, it's about 87% of the investor recommended. to make an investment. Okay, it's kind of run out of time, so I will draw some conclusion here. If you want to make an investment on certain stock, first you need to see the company background and then check the financial statement by using the above testing strategies, and then collecting some marketing formations and do some research on the analysis, the recommendations. Attached below will be several pages on the references and update material, including the latest quarter of the financial report. This can be used as the exercise on calculating and doing some ratio for the testings mentioned in this presentation. Thank you.